Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. Hope everyone is having a wonderful weekend. And for those who celebrate Easter, happy Easter. So we still have to prepare for the trading week this week. Trading resumes tomorrow. Friday was no trading. But before we get started, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, please come back, comment on the video, and definitely like it if it is helping you. So, where do we stand right now? Where do we stand with our sector review? Now, the point of this is to help you identify key sectors which you should be focusing your attention for bullish and bearish plays. I know a lot of people don't necessarily short stocks. So it's mainly for the bullish ones, what things to avoid, what things to focus on. Like energy is still in a strong uptrend, nowhere near a long-term sell signal. Could be due for a pullback. By the way, just because I have a potential double top on here, you see this little pattern right here, does not put it in bearish mode. Let me show you why. See how it's just hugging the rotation zone up? Now, there is a little key resistance by this recent high at 80.13. We wouldn't get into watching for a short-term bigger pullback until we got a close below about 76.85. That would put it below the 12.5% harmonic and below the bottom of the rotation zone. Then we'd start watching for the bigger pullback. Does that mean it would have to trigger this double top? Not at all. It could come back here into this big consolidation range. And especially if we got back down to around the 73.50 to 74, we'd be looking for some aggressive entries in the energy sector. But right now, it's still just trading with the trend and raising your stops in the energy sector and being aware that we do have some potential divergences. Cycles could be potentially rolling over. So just keeping that in mind with the overall thing. Let me just check the weekly on there. Cycles, although on the weekly, are getting closer to oversold. So you see the RSI here at the top versus our cycle indicator here at the bottom. So there is a little room for still a potential pullback before making another strong push higher. Areas to watch for: 8208 if you're trading the sectors where we'd raise our stops. Major cluster to take profits and or raise stops again. Again, that wouldn't be full profits with it in this strong bullish mode, would be 83.77. So just keeping an eye on that. And also you see this weekly rotation zone. The weekly major support is back down at 70s, but anywhere it pulls back into, we'd be watching for a rotation back up anywhere in this zone. So that's where we stand. XLE. Real estate starting a little pullback, still in long-term bullish mode. However, we do have this little sloppy head and shoulders pattern we will be keeping an eye on. So it still is not broken below the neckline, and you actually have to get down to this 4-hour chart to really get it in clear view. But still watching for this, and this would not be for shorting. This would be watching for pullbacks to these key levels, especially around 47.60, which would fill this gap also. And then we'd watch for a potential bullish resumption of trend. On the daily, cycles are at bottom, and this has not triggered yet. So if it turns up tomorrow, it could avoid triggering and get to a point where it invalidates a potential sell signal. Because why? Again, we are in weekly bullish mode, and just looking at here, see that bottom, we got the first cross of the rotation zone. Even do a pullback to that 47.60 area, would just be watching for a rotation back up. And then the long-term sell signal is nowhere near. I mean, it would have to get below 46.30 on a closing basis before we could even potentially trigger one. Okay, and just because it closes below there, like this was a close below there, but did not trigger the long-term sell signal. So real estate, still watch for bullish plays, not necessarily in home builders, but in some REITs and other things. XLF, the financials, dropping down. Still no sell signal yet. Still no sell signal, but this is an early warning shot. So this is not something I am aggressively bullish. Also, you see let me reverse this real quick. Let me reverse this Y, and I'll show you why in 1 second. So here was the last major high to the major swing low. We closed back below the 62.5, which does favor. Now we're back below the 75. So now I'm watching for support coming in 36.26 and then the most recent low area. So even though we don't have the long-term sell signals, things aren't looking real great for financials. So it's something really needs to be outperforming before I am interested at all in it, because we could tip easily into a major long-term sell signal with this dispersion top. It looks like it's starting to roll over with the top. You know, we get these rounded tops are generally very strong sell signals. So I will be watching in the next week or two for that long-term sell signal to then trigger. And then your major breakdown zone is below this 35 area. Below, right around here, is your major breakdown zone when we get very bearish on financials. So I'd be very picky with any financial stocks you are looking at, and don't just try to grab short-term bottoms because the bounces could be very small. XLK Technology dipping down, almost issuing a new sell signal now. Getting very close to issuing a new sales signal, and on a short-term basis, it closed below the 62.5 from this last little run-up. So I'm expecting returning to about 143.80 to the most recent lows over the next few weeks. That's statistically what we should be doing. Bounces in this are to be sold, and it looks like we might be triggering longer-term sell signals at some point. So technology, I have to be really, really picky with anything technology related to get into, because we could be starting to get the bigger pullbacks in cycles. Now, the cycles are at the bottom, so even on pops, that's where I'll be looking to potentially establish short positions in some key, very weak technology stocks. XLI. XLI, see, we have not triggered a sell signal in consolidation mode. So I'm keeping a key eye on this still, but let's just reverse our little harmonics here. Why do we use those? Because it helps with identifying key levels. And you see here, we do have a little mini double bottom. We have not closed yet below the 62.5 retracement. We've bounced off it twice, and we do have a little, as I said before, a little mini double bottom. So roughly, I will be watching for that to potentially trigger. Now, if it rotates back down, retests this key level, tested a couple times in the last 2 weeks, and closes below 98.80 approximately, then I'll be watching for the bigger pullback in the industrial sector. So even though we don't have a sell signal, if we start getting that bigger pullback, then, you know, the short term it could be bearish, and long term, then if we really break down, could tip into a long term sell also. So I am keeping a very close eye on this one, and something has to be in outperformance mode to get me interested in. Now, if we do come up and close above about 150 and trigger this double, stronger plays in the industrial sector I will start looking for, because we could get a nice little bullish short-term pop and avoid triggering some longer-term sell signals. So this is going to be a real critical week to watch for industrials, whether we trigger that buy pattern for continued strength or trigger a sell pattern, and then it would be avoiding industrials for a while. XLY, here's your consumer discretionary. Again, longer term basis, not triggering a sell yet. Coming up, the double is still in play. And this was just same side of one of the, on the daily basis, same side of one bottom. But it could not get to the third target yet. Still in play, but be very cautious if we start breaking down below some key levels here. No long-term sell signal yet, but we start getting a close below 173, then I will start eyeing that. Right now, it pulled back between the 50 and 62 harmonic, where we watch for the rotation back up. Could not really get above that 37.5. So what do I need to see before I start looking at anything in here? I need to start seeing pretty much a close above 182.50 before I even start looking at that, because it could not get above that first target. So keeping a very close eye, and if this does break down, and starts getting key closes on a daily basis below this 173, we probably will trigger a long-term sell signal again in consumer discretionary. Consumer staples getting very extended right here. So what does that mean to me? It's to raise stops bouncing off this key harmonic. We'll start watching for some little short-term pullbacks. We do have this little potential topping pattern, but your first area of key support is about 78.30 to about 78.20. So right in here, if we did break below that, my next focus would be 77.37. What would I be using those levels for? To watch for reversal patterns. Again, very overbought. Can it keep being overbought? Yes. And this has been on a very strong tear. So this is where we will start moving up stops on a more aggressive basis in consumer staples. And if we get that bigger pullback, then might get stopped out on a couple things and then start watching for re-entries, because this is in long-term bull mode, nowhere near any sell signals. If it does make a push higher this week, 79.89 is the next key level up, where we, again, will aggressively move up stops even more. XLV, healthcare, inside week, still way off from a sell signal. But we're getting that finally a pullback here, holding the 25% harmonic on a closing basis, barely holding the rotation zone. And I will get a little more bearish short term and watch for a slightly bigger pullback if we get a close below about 137.61. So if we start getting that, it's even more aggressively moving up stops on long positions in healthcare, and then I will start watching for that bigger pullback and then re-entries into the healthcare sector long term. Again, cycles are starting to get to the bottom, so we could see a rotation back up, especially if this 25 holds. So that's why I'm just saying watch for moving up stops at key levels, because if this rotates back up, there could be some interesting things, again, still in bullish mode with healthcare. If I do see a rotation, I will do another scan of healthcare stocks and see if anything's set up really nice once we start getting that rotation back up for a new entry in the healthcare sector. So that's what I'm keeping an eye on this week with that. XLB, Material Select, still no sell pattern in this, long way off from there. We do have this potential sloppy double top. And remember, just because you have a potential doesn't mean you just get out of something, because those potentials could never trigger. What's a warning sign? We start getting below about 87.70 on a closing basis. Then I'd really start watching for a potential bigger pullback in Material Select sector. So that means I'm just watching, since it is long-term buy mode, I would just be watching for a pullback in which to identify core stocks in the material sector, which would be good buys at that point. Communications still in long-term sell mode. We had this little double that came up to the first one and then is rolling over. And so I'm not bullish on communications at all, sitting right at the 62.5. We get a close below about 66.50 this week. I'm going to be watching for a return to the lows. Okay, so nothing. I mean, this is, if you're still long in anything, I can't give individual trading advice, but this is where I personally would be looking to, if I was still long in anything in the communications sector, to aggressively move up stops. This gave a little pop counter trend. You can see here right up into the weekly rotation zone, where we start watching for a rotation back down, and we have got the rotation back down on a weekly basis. So nothing to do for me in XLC besides look for bearish setups and potentially bearish option plays. XLU stalling out at the harmonic. You see 77.03. Now I can raise up these harmonics, pulling back to the 12.5% harmonic. If we start dropping below about 75.60, I will start watching for a pullback back to this prior projection harmonic, 74.60 to about 74.50 for a buy in potential utilities. You see, we're way off from a sell signal, but we are getting, we have come out overbought. Cycles are starting to get to a short-term low. So if we do pull back and then get a rotation back up, anything you find that has a good strong re-entry signal in a bull trend in utilities could be another short-term buy pattern for another push higher. Again, very bullish on this sector. Unless we get that close below about 75.60, then I'll watch for at least a short-term little bigger pullback before getting super aggressive again. XRT, we have the retail. Retail's been in sell mode. Nothing to do in here at all. Trying to hold this little channel, but not doing it so well. I'm not really looking for anything. Cycles at the top. I'm looking for another push down in here. So I'm not really touching anything in strongly based in retail at this time. IYT transportation. We got a little bounce back to the 25% harmonic, but this is still in long-term sell mode. This is just a corrective bounce you see back into the daily rotation zone. If it does get a close above about 249, we could get a slight pop higher to around the 253, but again, I'd be watching for a rollover play in here. Cycle's still moving up out of oversold condition, but there's just nothing to do besides look for bearish plays in the transportation sector. Commodities, still moving up. You see holding this little 25% harmonic and moving back up. The longer term double is still in play. No sell signals here. So this is just keep trading. You see no key close below the rotation zone in the last few weeks. Yes, you do have a potential double, but we're a long way off from triggering that. What would be my first warning sign? We might be at least topping temporarily. A close below about 27.25 would take us into the daily rotation zone, and to confirm that for at least a bigger consolidation pattern or a slightly bigger pullback, we need to close below about 26.60. But commodities still very, very bullish long term, even on any pullback plays, looking for re-entry things that we might have already taken profits or been on aggressively raising stops, get stopped out of. DBA agriculture, still very bullish on this. No sell signal in sight on a long-term basis. On a short-term basis, again, getting a close below for this about 22.30 would then I'd start watching for a pullback into this consolidation area, and you don't want to see a close below about 22.13 because then I'll watch for a bigger pullback. But right now on these pullbacks, I am still watching for reentries. Cycles are rolling over, so I would not be surprised to at least see a short-term pullback if we start getting that close into the daily rotation zone, but then those will be for re-entry plays into anything agriculture related. So please keep that in mind. With that, hope this helps everybody. Again, if you are new here, please do consider subscribing, liking the videos, and ringing that bell. Longer term viewers, come back and like the videos and leave some comments. Let me know if this does help you with your weekly setups, what to focus on, what to potentially avoid if you only trade from the bullish side, what to watch for with potentially bigger pullbacks in, so you can position yourself accordingly for the coming week. And remember to tune into our live streams that happen multiple times a day, Monday, or actually Sunday through Friday. So I will be doing a live stream in a while coming up to help us prep in the stock indices and other key things like crude, gold, some stocks like Tesla, and anything else people want to look at. With that, I will wrap it up for now. Again, everybody, have a wonderful rest of your weekend. Talk to you soon. Bye for now.